What's going on, guys? Well, we've been bullish here in the channel, right? Because our price structures, our main counts, and our preferred interpretation of the markets from the January high towards today's low has always been objective to the upside. However, based on price action today, it is likely that I had a 40 60 40% bearish, 60% bullish conviction that we were going to start hitting on higher after yesterday's Tesla report, after the Dow hitting above its previous wave one high, that perhaps we were going to hit on higher. But I think it's time, guys. I think it's time that we start exploring downside. All right, I think it's time to start exploring price action to the downside. While it may be a little bit more painful, but the overall outlook is still going to be bullish and positive. So in the short term, I am bearish. I am looking for price action to keep on going lower, about 13% more to my initial targets here. And I'll explain to you where these targets came from. So before we dive into the analysis, guys, consider subscribing to the channel and give this video a thumbs up. As you know, it'll help this channel grow. And thank you so much for doing so. As an alternative, if you guys want to collaborate with your Elliott Wave analysis and you want to join a community of Elliott Wave traders, consider joining Trending Waves. The link to the Discord group is pinned down in the comment section. So this triple Qs, I mean, we're still going to review our bullish count for argument's sake, right? But we're going to start off with our bearish here. And our bearish count is suggesting that this whole thing will probably unfold in a diagonal, right? In an ending diagonal in the wave 5 of the cycle degree. Okay, it's looking like it. I mean, we may not be able to get that. We may just get our standard 1-2, but we'll see when this starts unfolding. I mean, it's too early to tell, right? But the reason why I'm saying this is because in an ending diagonal, right? If you guys are aware of ending diagonals, they are made of three wave subdivisions between the 1, 2, 3, 4, and 5, right? All of them have three wave subdivisions, but it's a bullish, well, in this case, it would be a bullish pattern, right? So how do we have three waves here? So the way I'm looking at this, guys, if I may, right? I am looking at this as an actionary wave. All right, let me delete this for a second and let me just use the rectangle tool here. So this zone here is an actionary wave. Okay, we made an impulsive structure to the upside. This is a corrective pattern, and then we have another actionary wave here. Okay, so we have three waves. We have evidence of three waves. Yes, we can dissect 5 waves like we've been doing, right? Given that this will be the wave 5, but let's look at this from this perspective. Okay, so if this is the case, this would be A. All right, let me label this for us. This will be A, this will be B, and this will be C. And now we're making another A, B, and C. So we start forming this triangle. Okay, wherever this lands, I'm looking for it to complete down in this area between the 288 and 290. And then we're gonna get another 1, 2, and 3 waves. And then we get another 3 waves down, and then another last 3 waves up before we then are met with our larger correction to the downside. Okay, that is my objective. That is my perspective, rather. Okay, so considering that this may be a 3 wave or a 5 wave, I am looking at this as a wave 1. The implications are still the same, right? We're still looking for a 3 wave pullback into the wave 2. So these targets, as I mentioned earlier in the start of this video, these targets arrived from the yellow count, which is the primary degree, started on March 17th or March 18th of 2020, completed on November the 18th, November the 20th, right, of 2021. And then we started going lower. So you take your retracement tool from the low to the high, and you get your 38.2% retracement. Now, for Elliott Wave guidelines, okay, wave 2s are always going, or not always, I take that back, excuse me. Wave 2s will often, repeat this, will often develop in a zigzag. And what are zigzags made out of? I explained this to you many times before. So zigzags are a series of 5. Let me highlight this here.
I didn't get that.
Oops, my apologies for that, guys. It was Siri. So zigzags are usually made up of 5 waves down in A, 3 waves up in B, and 5 waves down in C. So that's what's looking like here at the moment. Although if we zoom in and start dissecting this, it's looking a little bit dicey. But regardless, given the fact that we have evidence of 5 waves down, all right, 3 waves up, and now we're rejecting lower, I am inclined to believe that this is the A wave, the B wave, and then the last C wave of wave 2. Okay, guys, so let's take a look at levels. Let's dive down to this zone here. Okay, and let's take a look at what the pain will look like should we continue on lower. Okay, so excuse me, let's dive down to the 1 hour time frame, and let's take a look at the subdivisions here. Okay, I'm just gonna delete this because these are getting a little clustered, and I'll just draw them with you here. All right, so let me clean this up so it could be a little bit more legible. Now, from our high here on November the 22nd, we have wave 1, wave 2, 3, 4, and 5 to complete the intermediate degree wave A. Then we have A, B, and C to the wave B. Now, wave C's are made up of 5 waves, right? So we have evidence of that. 1, 2, 3, 4, and 5. We have 5 actionary waves here. Now, when we look at this, guys, right, when we look at this from a retracement standpoint, from the high to the low, a B wave will come into a 618 retracement, 786, 50%, but oftentimes the golden zone or the golden pocket or the 618 in this case, spot on rejection, and now we are rejecting lower. Okay, yesterday's price action, when we were discussing this video, we were somewhere here, right? On April the 9th, April the 20th. We had gone up, closed slightly, and then we gapped up, but then we ended up closing. Now, this was major resistance, as I pointed out in yesterday's video. This zone here did not break. And we noted that in our Discord group that this was major resistance for the Qs and for the NASDAQ. And then what did we do? All day we started selling. We broke the low, we broke this range, and we broke the low. So the subdivision here is as follows. This is what I'm looking for. I want to see that perhaps, okay, just perhaps, this is wave 1, 2, 3, 4, and our final 5th wave of wave 1. We get A, B, and C of wave 2. Okay, we don't continue on higher. I mean, again, the markets will do what the markets are going to do, and we'll be on standby to observe what they're going to develop. But if we get 3 waves up into a proper zone of resistance, if we don't break above this level, okay, which is already proven to be major zone, gap down, couldn't fill the gap, resistance back here, resistance here, and rejection, I am going to go risk off, and I am going to look for downside opportunity to take us into the wave 3. Okay, so that is my objective. That is my game plan coming into tomorrow and following couple of days, maybe into the next week. I want to see this confirmed. Otherwise, maybe this is already the wave 1. We get three wave pullback. Maybe we break above this, but then our zones to look for, should that be the case, you already see where that's coming, right? You already see that there's confluence there. We'll look for the 38, the 50, and I think maybe the 618. That's going to be our last level. All right, so this zone here between 356 and 347 should act as resistance for the Qs. Okay, once we see this 3-wave pullback, if today was the low of wave 1, because we can still count that, right? 1, 2, 3, 4, and 5. Okay, we subdivide this and take off fib ratios. I'm guaranteeing you that it will match up and pair up correctly. So considering that this may be the wave 1, wave 2, 3-wave pullback, and then we head lower. So watch out for this area, because this is good. This could serve as a good opportunity to either hedge your positions. I mean, growth stocks are getting beat up to the pulp. You already see with Netflix. We're looking forward to Facebook earnings, guys. Facebook earnings is going to be very interesting. Anyway, going back to our technical analysis here. So our last level, right, to look down for the downside, once we see completion of the wave 3, if we head lower, we'll wait. But for now, 290 and 288 are my levels to the downside. Again, that represents from today's close roughly 13% more downside to go. Painful, yes, but it should be very short. Once this completes, you already know. All right, guys, so it's still worth noting, taking a look at our bullish count, because that is still the case. That's not out of the question just yet. Let me just clean this up for us. All right. So I'm going to hide our alternate count and we're going to go to our main count, which is still alive and well. It's not, don't worry, it's still alive and well here. So our main count, right, will suggest that the wave 3 completed on December, wave 4 completed on March the 14th, 1, 2, 3, 4, and 5 to the wave 1, right, A, B, and this will be a very shallow C wave. So markets are, it's do or die at this point, right? We cannot, under any circumstances, start breaking lower beyond the 786, which is why on our alternate count, we want to see potentially this be the case to start heading higher. This is the zone where we will know the truth. But in the event we keep on going lower, all right, and we break below the origin of wave 1, 317, which is just, what is it? It's just about 4.7% away. It's not out of the question that we may see this coming into next week. All right. So game plan for the bullish count. Game plan is see support at 329.07, see a bounce, continue on higher, break major resistance here at 348, and then we are trying to see if we're off to go to the races, because again, this is still an ABC pullback. Pretty actually I would do that here. So A, B, right? A, B, and C, and then the last leg lower into the C wave. Very shallow C wave, I'm not gonna lie, very skewed, but it's still not out of the question of the possibilities. All right, over to the SPY. The SPY, let's take a look at our bearish count again, just like in the Qs, right? We're still looking for the same deal, guys. Same deal. We're looking for the zigzag, all right, sorry, for the 3-wave up into the wave 1, ending diagonal, ABC down into the 2, confluence at the pivot of wave A. All right, we see the 1618, which is the A versus B, and then we see that our retracement for the wave 2 from the wave 1 comes in at, let's take a look, somewhere at the 38.2% retracement. So 355, 360 will be our downside opportunities, our downside objectives and targets for the SPY. That represents about a 20% more downside to go, entering bear market territory, correction territory. But once it's complete, the third wave is at play. All right, now taking you down to the 1 hour time frame, what should we look for here, guys? What should we look for? All right, so let me correct this here. I'm sorry, clean this up here. Let me see something. All right, so we have the A wave. All right, where did the B wave complete? The B wave completed at the 786, I believe that was, yeah, 786. Now we have 1. So get this, right? We are either on a flat correction in the wave 2, right? We see the A wave, we get the B wave, we see a bounce coming into tomorrow, rejection here, or rejection between the zone 456 and 448, or the wave 2 has completed here at the 50% retracement, and we are now gearing up for the third wave. This is going to be a little painful, guys. I'm not gonna lie. So wave 1, 2, down in 3. Where's the third wave going to potentially end if this was the wave 2? So easy. We take a retracement from the high of wave 1 to the 2 to the high of wave 2. Sorry, from the high of wave 1. From the high of wave 1 to the low wave 1 to the high of wave 2, guys. My apologies. Long day. So at the very least, all right, we're going to get the zone. At the very least, we'll get equality at 424, which is still relatively above our invalidation level on the wave, on the bullish count, but it will be somewhere at the 424, $409 region. If we keep on breaking lower with conviction, just ripping lower with no, like if it's paper, right, then the 409 is not out of the question. We may be exploring some trade opportunities should we keep on doing that, but I like to see this head on higher a little bit and then we fade lower. All right, guys, so again, this zone 456, 448 is our resistance, and our short-term support should be anywhere between 420 to 409 if you're bearish right now. Okay, but if we are bullish, then we should look into our bullish count, because that's again alive and well. It's a little bit more clear on excuse me, on the SPY. So let's take a look at that. Let's cite this and then let's turn this on. So unlike the Qs, this one is still possible that we are going to see price action head on lower, but find support because this is still a cleaner pullback in the wave 2. Oh, sorry guys, I just caught something. Anyway, so wave 1, 2, 3, 4, and 5 into 1, A, B, C. Maybe the C, maybe the A is here, maybe the B is here, be completed at the 4, at the 50% retracement, and then we get one more leg lower. If it's a zigzag, which is looking like it to be, then equality is at 424. Okay, again, just like in the previous count. So we'll get the C wave down towards the 424, more downside, and then support to the upside. Okay, so be aware that being patient and perhaps starting to get, if you're too bearish, be careful. But if you're too bullish, again, also be careful. Just consider the fact that we may head lower. All right, guys. Let me see if I could take a look at the SMH. As I mentioned yesterday, in the SMH, we've perfectly found the 50% retracement as resistance. We started breaking lower, so a break below 237 is going to be further confirmation to the downside. IWM, just brutal. I mean, again, I've been saying this for a very, very long time. Until we break above this resistance area, I am not considering this to be anything but a correction of a W, X, and Y. The Dow, pretty disappointed today, guys, because the Dow was a chart that I was pretty excited about. But as I mentioned yesterday, there's still a possibility that we are in an ABC correction. So this is still the A wave, the B wave, and then down in C, maybe to support area, and then we are now going to head on higher. Not looking too good. It's looking weak. RSI is not looking good at all either. MACD, histogram, and moving averages are crossing over and into the downside. Even if we look at the higher degree time frames, we see that MACD histogram is getting weaker, and we don't see any positive divergence except that we make a high here and it's still trending lower, so losing momentum. Okay, guys, so that is it for tonight. It's looking a bit scary out there, but with our analysis and our convictions, we should know relatively soon what the markets will likely do in the coming days. Okay, guys, so thank you so much for tuning in. Hope you guys have a wonderful evening. I'll see you guys tomorrow. Bye.